Good morning, welcome to the Market View for Monday the 23rd of June 2014. Starting off with the 30-minute British pound. On Friday we actually had a signal and prices moved lower following this sell signal as well. The market had to break down first of all through the 170.50 level, which it did, but it tried to come back, which you can see here. As soon as the market hit the entry price, started to rally back, and then the second bar as well coming off the lows after trading once again through the entry, and then trying to move higher. At this point I thought it looked like we were going to be moving back to the upside and we were going to end up with a 16 pip loss, and then eventually the market broke through and the market trying to buy back here. So we've got the green candle there, it's the first one in the down move. So applying the principle of 50% above any green candle that appears after the entry price, you can see that the market took us back to, or rather the stop there is at 170.51, but then the market moving below the close of Thursday and then starting to move lower until we have this next green candle just below the DP there, and again the next bar failing to take this one out and then continuing to move lower until we have the green candle there at 5 p.m. So a slow grind down. It looks like there's a lot of pips in this move, but in fact there isn't, because if you look at the grey shaded line here down to here, this is just 50 pips. So we're looking around 34 pips on this trade, or somewhere in that region. So there's the entry price down to the where the stop is there, and that's 27 pips for that move. So not as much as it actually looks. So even though the market just ground down slowly during Friday's session, the move was less. Well, the whole range was around 50 pips, with 27 pips to be taken out there in the middle of the move there. So a fairly quiet day, but it's pips at least. Nothing we can do about how quiet the market is, and it was one direction as well, so that was also a benefit as well there. In the daily charts, you can see Friday's activity there, the market coming down, and of course you see the market reversing, heading back now towards the 170.50 to move higher once again. And we looked in Friday's market view of the next upside targets, which are the sort of $2 to the pound area for the British pound. So a bit to go yet as far as the bigger picture is concerned. On the news front, we've got French manufacturing PMI out this morning, and German flash manufacturing, those are to be released also there to show more or less the same as before, or as the forecasted figure. And then this afternoon we have existing home sales from the US at 3 p.m. So not a lot of news around today. Nothing major, nothing to be too concerned about as far as the economic news is concerned, of course. No CPI, unemployment figures, or interest rate FOMC type meetings, even though they're high impact, they're not major ones. In the Dow, the market traded back to the high that we had recently on the 9th of June, and you can see they're just trading to it and then failing to close above the 16,970. 17,000 in my opinion is still on the cards. We're only 30 pips away, so expect that to be hit this week before we see any sort of down move. Notice the volume on Friday, well this is Thursday actually, this is the rollover from the June futures to the September futures, and this is this happens every time you get, as you can see there, in the March contract as well. So it's not any selling that's around in this particular one. We've got the same in March there, and the same in January. So these are not unique. Well, they are unique events. They happen just as the underlying futures contract and options contracts expire, and you get a lot of volume as the rollover from the one quarter to the next takes effect. So the next time you'll see this is September. So the market trying to move higher on Friday fails to do so, closing back below the 16,970 resistance that we saw on the 9th of June there. In the implied volatility, we can see again we had a new low on Friday, the 20th. We were down at 840. So another new historic low in the implied volatility. It certainly begs the question, how much lower can this actually go? And of course, the answer is down to zero, which really would be fantastic if it did, because then we'd have the mother of all crashes in the markets, or corrections at the very least. But at the moment, we're holding around the 840 level. Let's see if this is sustainable and see what happens during this week's trading session. Right, well, that's it this morning. It's short and brief to the point, but covers what's a summary of Friday and what's likely to happen, certainly for today. All things being equal, I will see you in tomorrow's market view. As ever, have a good day, and also thank you for your support and also for watching.